There you go. All right.
Laura Simpson with Future Home Realty.
Awesome.
Barbara Wooden, Future Home Realty.
Diana Slavely, Charles Rucker Realty.
Awesome.
Jackie Spathling, Dayton Associates. Rebecca Wellborn, Keller Williams.
Joe Elmer, Future Home Realty.
Pat Solsky, Future Home Realty.
Shelley Sager, Florida Suncoast Realty.
Lisa McGanna, Keller Williams, Suncoast.
Awesome.
Zach Savimian with Future Home Realty.
Elliot Wagner with H&J Property Management.
Awesome.
Robin Vaughn, Future Home Realty.
Maureen Smith, Future Home.
Sherry Williams, Councilman Fox.
Awesome. Cool. Good deal. All right, we'll get going fast. I started a little bit late. I promise I'll be done by 10. All right. Here's the schedule. We're going to get through this. If you want to stick around after this, we have our 100K club that we've been meeting for the last couple months. All right, this is our last session. If you want to stick around for a little bit and get a taste of that, you're more than welcome to. We'd love to have you. It's the final one, but we're going to wrap it up in a bow, so when you get the synopsis, you feel like you've been there the whole time. All right, so you just got to do, hey, I skipped the first 6 and I'm good, and I got it all in one fell swoop. So that's perfect. All right. First of all, now that you've all introduced yourself, who is incorporated currently? Yeah. Okay. Yep. Perfect. Good. Usually have 1 or 2 in there, and sometimes people come in and they're incorporated, but they don't know why. Okay. So I don't know. Someone told me to do it, so I am. And so sometimes we can add some benefit to doing this. All right. So a couple of disclosures I'm going to go across. First of all, I'm not a CPA. I'm not an accountant, bookkeeper, IRS agent, tax special in any way, shape, or form. I used to have the guy who did my books come in and teach this class, and I stopped doing it just because they, by nature, are so dang conservative. All right, they just, because they're so afraid, and then they certainly would never let me record the thing. All right, it's like, man, you're gonna put this, and this is gonna be out there on YouTube? No way. You're not allowed to, record me saying this because, I say all sorts of stuff that I say, hey, don't tell the IRS I said this, but, all right, so because of that, I've learned that, hey, you know what, let me just do it, and then I'm going to ask you to confirm everything I tell you with your own person. But at the end, we're going to talk about the fact that not all bookkeepers, CPAs, and or your tax professionals are the same. All right, you need to interview one if they're not buying what you're selling here. All right, now, in fact, first of all, you can write my email down. If you want a copy of the PowerPoint, all right, just let me know. And that way, you don't have to worry about taking as many notes. If you don't want to, you can always come back and reference the PowerPoint if you like. My email is Bob, MCD, so Mary Charlie David, at futurehomerealty.com. And hopefully I don't have to tell you guys how to spell realty. When I say that to everybody else out there, they always want to put reality. All right? It didn't go through. You didn't get my email. Where'd you send it? R-E-A-L-I-T-Y. No, that's reality. I'm realty. Futurehomerealty.com. All right? And just email me. That's my to-do list. When I get that, I'll send you a copy of the PowerPoint. Happy to do so. Also, this one, if you really miss something, I tend to talk really fast. And so if I say something too fast that you didn't catch and you want to catch the whole thing all over again, we are recording this one. It'll take us a day or two. We'll have it up on YouTube. So if you want a link to where that is, we can send you back to that as well. Cool? Awesome. Good. All right. So I'm not any of that. The reason I started teaching this is because I can teach it from a more real-world perspective of it and kind of tell you what some accountants will tell you, what some won't. Okay? Here we go. All right, I'm also not a tax attorney, paralegal, judge, Supreme Court justice, or have anything to do with the legal profession if I can help it at all. Usually when I have to deal with the legal profession, it's not a good day for me. All right? And so with that in mind, just bear in mind that you're going to have to investigate and confirm everything I tell you with somebody else. All right? My name is Bob McDougall. I'm the broker owner of Future Home Realty. Me personally, I incorporated my own personal sales business. I've been in the business since 1994, so 20 years now. Back in the late 90s, okay, 98 or 99 is I think when I finally got it, and I wish I would have done it in 1995. All right, it's just once I asked people, I saw people that had, you've seen people that have PA, LLC, Inc. behind their name, right, on their signs, their cards, and everything else. And I just thought when I was 24, and they're just really highfalutin, basically, is what I thought they were. You know what I mean? They were something special because they were incorporated. There must be some reason. And then when I asked them, I say, why do you incorporate? What's the, it's because I get to write off everything. So, well, I write off everything. I'm not incorporated, and I still write off all my expenses. And they said, well, there's a reason. Okay, just because, like your parents, why? Because, all right, so that's what they told me. And it wasn't a good enough answer for me. So I finally kept digging until I found somebody that actually explained it to me. It took about 10 minutes, and once they explained to me in 10 minutes, I got it. I've been doing my own taxes for long enough to understand it. And I said, okay, now I get it. Hallelujah. Why didn't somebody say that to me 4 years ago? Okay, so that's what we're going to talk about. All right, everything entailed today, you need to verify with your own accountant, tax professional, and/or attorney. All right, so just run this by them, and if they push back, show them a copy of my PowerPoint and tell them to prove you wrong. Don't just say for the sake of their, hey, you know what, that's too much of a hassle. I'm going to show you how the first year I did this, I saved 12 grand. 12 grand the very first year. All right, so for me, it was worth the hassle. They may not say, hey, it's not worth the hassle. I think it's worth the hassle. Okay, the 12 grand. All items discussed are subject to change. All right, and that's due to the unstable nature of the politicians we elect to quote unquote represent us. Meaning, this is all based on current tax law. All right, current tax law can change, and so all you have to do is keep, abreast of what's going on with that. All right, to do that. Okay, cool. Here's the reasons why you need to incorporate. If those of you, if you are incorporated, and didn't know, here's why you need to incorporate. The biggest one for me is tax savings. All right, followed closely by the second most important reason, which is tax savings. Okay, and then don't forget tax savings, and then there's tax savings and also tax savings. The whole idea that you're incorporating to protect yourself legally, throw it out the window. Okay, there's no, Morgan and Morgan will pierce your corporate veil. All right, if you think that you're going to, by the way, I live in I'm the broker owner of Future Home Realty, about 750 agents in the area, and but I live in Brentwood, Tennessee, just south of Nashville. All right, I come down in a couple of weeks, and I'm here to do some training, that kind of stuff, and I love coming down. I pitch myself all the time. I got the best of both worlds. I get the fall colors right now in Nashville, and I get to come down here and enjoy great weather, and I get to go back and forth, and I just love it. It's perfect. I'm driving down the road, and I see a bus the other day in Brentwood, Tennessee, which is a suburb of Nashville. All right, on the bus, Morgan and Morgan for the people. I thought I ran away from those people. I thought I moved here. All right, my 11-year-old son, who from the day of 4 will say, he says, Morgan and Morgan for the money. I mean, for the people. So we talk about it. Every time I write my insurance check, I think about Morgan and Morgan because I know that my insurance premiums are much higher because of people like Morgan and Morgan. So, all right. Anyway, don't do this to try and protect yourself. Your broker has an E&O policy, all right? And anytime you're going to get sued over a real estate transaction, your broker's getting sued. And the reason your broker's getting sued is because they're after the insurance policy, all right? Because the insurance policy has the money to pay. Your broker may or may not. You may or may not. And so I wouldn't do this under the guise of I'm going to protect myself legally, all right? It's not going to happen. But the tax savings are significant, and that's why we're going to do it. Okay, typical agent, those of you who are not incorporated, right now you are sole proprietor. Your real estate business is a sole proprietorship, and you file a Schedule C on your tax return. All right, you have your 1040, and at the end of that you file a Schedule C, which is a sole proprietorship, and you list you get your 1099 from your broker, right? You put that in there as income earned, and then you start deducting things. All right, legitimate deductions, your MLS fees, your board dues, your signs, your car allowance and/or your mileage deduction, all your advertising, all that stuff, right? Remember, all that stuff is coming off what you owe. Bam, 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 bam. So you're going to take that 70 grand worth of gross 1099 income and start whittling that down so you have to pay taxes on less, right? So that's cool, and that's what you're able to do. You're able to deduct all that, but that's all done on Schedule C right now. Your net income, at the end of the day, let's say it's 90, and we whittle it down to 60. Okay, $30,000 worth of expenses by the time we take our mileage deduction and all that other kind of stuff. We find receipts on the ground and say, oh yeah, that can be check that. You can stuff in our pocket. All right. By the way, a quick word on receipts. You know, I started doing with my receipts now. I started doing it this week. I heard, hey, it was an advertisement on the radio about this company that will. You just snap a photo of your receipt and you upload it to their app and all that kind of stuff, and they keep track of it and all that kind of stuff. And so that's kind of cool. But I looked into it and it was like they wanted to charge 5 cents per receipt. And after a while, it can add up. So I said, why wouldn't I just do it myself? So I started taking my receipts and I just snap a photo, email it to myself, throw it away, and then once I email, because by the way, do you need a receipt? Do you attach your receipts to your tax return? No. It's just there for audit purposes, right? You're saying I took these deductions, and if the IRS comes along and says I don't believe you, then you have to be able to prove it, and so you gotta have a copy of those things. By the way, it's better if you take a gas receipt, all right, 6 years from now when you get audited, you take it out on the kind of paper that they do it on, that ink's gone, it's disappeared, right? This is an even better way to do it, so why not do that? But then again, if you can do that, make sure you back up your computer, use Carbonite or something like that, okay? It's just, if you guys aren't using a Carbonite or some one of these online backup things, do it. Oh, I don't want to do that because that's all going to the cloud. Somebody can have access to my computer. Guess what? They have access to your computer. All right? If you think that they don't have access to your computer right now, you're wrong. All right? So, that being said, the net income. So I write off all my expenses. That's 60 grand I'm left with. Okay, so 90,000 of gross. Okay, minus 30,000, 60,000 net. That's all subject to income tax. All right, and also is subject to Social Security and Medicare. All right, we call that FICA. FICA is the Federal Insurers Contribution Act. Okay, it's basically two things: comprise that, and that's Social Security and Medicare. All right. It's the easiest way to file. Right? There's no problem. When I say that, there's not a separate return we do for our Schedule C. It's a schedule attached to our personal return. If you went to H&R Block, they're going to charge you an extra $20 to do a Schedule C. All right? They might charge you more if you come in with just a big shoebox full of receipts, and you say, hey, let me know how much that adds up to. If you've done the work for them, it can be as little as $20. If you don't do the work, then, and we're going to talk about that. We're talking about bookkeeping, why you should incorporate, if nothing else, for forcing you to be a little more organized in your business. By the way, you guys know you're running your own business, correct? Everybody agree with that? Raise your right hand. I am CEO of Me Inc. All right? If you aren't running your real estate business that way, if you think you were, I run 750 agents, we run into agents, oh, I'll be out to dinner and we'll meet people from our company, right? Oh, let me introduce you to my boss. I'm like, whoa, 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 whoa. Time out. All right, I'm not your boss. All right, you're your boss. Okay, you are your own boss. That's our whole mission statement at Future Home Realty is we're out there to provide real estate agents the best, most profitable, effective, efficient way to run their business. All right, because it is your business. We're just coming alongside you, helping you run your business most profitable, effective, efficient way. All right, so just bear that in mind. Okay, it's the easiest way to file. All right, only a Schedule C is attached to your personal return. That's what you're doing right now. Cool, not bad, you have to do it, all right? I'm glad you're doing it, but let me show you a better way. Okay, here's what the incorporated agent does instead. They don't file a Schedule C. They file a corporate tax return, and they have a shareholder distribution, which is called a K1. Don't worry about the terms here. I'm going to show you a real life example. I just want to give you an overlay of the broad picture first. All right, so an incorporated agent gets a K1. Matter of fact, if you're with us, some brokers do it differently, but if you're with us, when you incorporate, you will no longer get a 1099. All right, because a corporation, Future Home Realty, does not by law have to 1099 any other corporation, Joe Elmer PA. All right, and the reason is because Joe Elmer PA is his own corporation, and if ever Joe Elmer PA ever gets audited, they're going to just say, well, how do you prove your income? You don't have a 1099, it's all bank statements. Because no longer, gone are the days when you incorporate as Joe Elmer PA, Joe Elmer Inc., or Joe Elmer LLC. Gone are the days that you can cash that check. That check must be deposited into a business account. All right? You ever had work done at your house? You're the guy who says, all right, so it's kind of an independent contractor kind of guy to do work and say, hey, should I make this out to Joe's Roofing or Joe? Why don't you make it out to Joe? You know why? Joe wants it that way. All right, so Joe can go cash that check, and there's no paper trail, all right, to his audit, so he can just pretend that that money never came in. All right, so your days of being able to do that are gone. You can't cash that check; it has to go in. So the first thing you're going to do if you ever got audited through your corporation is they're going to say, "Let me take a look at your bank statements." Hi, Joe. Your corporate tax return says 90 grand of income minus 30,000 expenses, 60 grand of net. However, your bank statements show $138,000 worth of deposits this year. And that silence right there is dead. Okay, because you're sweating like a mother. All right, okay? Because you're like, holy smokes, I didn't know they realized they were going to do that. So that's why I decided to pay out. That's how I'm going to do it. So we're going to do a salary plus a K1. We'll talk about salary in a second. Okay? The ability to deduct all the expenses as businesses, just like when you were a sole proprietor. So when the people were telling me, oh, you get to deduct everything, it's why I incorporated, that doesn't fly. That's on both slides, okay? I still, there's no difference there. The net income, that 60 grand of net, is still subject to income tax. I am not, when I say tax savings, remember I told you about tax savings? It's not saving money on income tax. I can't get you out of that. The only way I can get you out of that is to vote differently, all right? That's the only way you can lower your taxes, all right? But I can't show you how to get out of paying taxes that way. However, only the salary you take is going to be subject to FICA. Now, here, my little laser, I want to use this thing. That right there, if you leave with nothing else, if you remember nothing else, all right, remember, only salary is subject to FICA. Only salary is subject to FICA. Only salary is subject to FICA. That is the key to the savings. Because Joe Elmer, PA, is going to pay Joe Elmer a salary. All right? That is significantly less than the profits of the corporation. And there, my friends, is how you save the money in this. Let me show you a real life example. There are costs associated with incorporating, because remember I told you, sole proprietor, there's just a Schedule C. All right? There are some costs associated with incorporating. There's monthly and or quarterly payroll, because Joe Elmer, PA, is paying Joe Elmer a salary on a monthly basis, or a bi-weekly basis, or semi-monthly basis, or whatever you decide to pay. All right? So because of that, you have to have some payroll reporting. Okay, you got to file quarterly reports. There's an annual corporate tax return. So instead of just a Schedule C, you actually get another tax return done for your corporation. All right? And that corporation is going to take the profits of that and distribute it in K-1s to its shareholders. Now, your shareholder may be you, maybe Robin Quant, maybe the sole shareholder of her Robin Quant PA corporation. All right? And maybe you and a spouse, you and a significant other, you and kids, if you wanted to do that. But every person who's a shareholder, based upon the percentage share of ownership of that corporation, is going to be distributed those earnings, because you're going to be an S corp. All right? And S corps, by definition, disperse all the income at the end of the year. By law, they have to. You've ever heard the term retained earnings? Retained earnings only apply to C corporations. C corporations are usually IBM, Apple, and those kind of companies. Those are C corps. You do not want to be a C corp. All right? Because C corp has corporate taxes. Okay? You don't have any corporate taxes because there are no earnings at the end of the year, because you're distributing it every year. You get rid of it out of the account. Hey, I put seed money in there. Everybody knows what seed money is? Anybody been a bartender? Okay. Anybody ever played music at a hotel lounge? Okay. You know what seed money is, right? You put some money in there. It's like, oh, this guy must be good. There's money already in his tip jar. Well, it's because you put it in there, right, to get that bad boy started. It's called seed money. Yeah, this guy must be good. So you put 10 grand of seed money, all right, into your bank account to start with, your corporate checking account. And at the end of the year, you look at it and there's 70 there. All right. You distribute the 60 and say those are earnings, and I'm back down to the 10, which was my startup cost, my startup fee, or whatever. And you can start. Don't think you have to have 10 grand to start. You can have 10 cents in there for all I care. All right. But that's just what it is. Cool. Got it. All right. And then you also have annual state filing fees that are associated. And I say this because we're going to do an analysis of, okay, at what point does it pay for me to incorporate? All right? I'm a firm believer in this, that if you're running your business like you should, okay, if you're actually looking at things from a business person's perspective, then if it costs you more money annually to have a corporation than you're saving, don't do it. Right? That's stupid. Stay where you are. Keep doing what you're doing. Don't incorporate for the sake of saying, so I can have a PA behind my name. Right? Guess what? Your people don't care. Right? They don't care. They're not going to do this with Robin because she has Robin Quant PA. All right? And, well, any other initials for that matter. GRI, CRS. They say, what? WTF. Just kidding. Clean this up. What the W2H, all right? What the heck? Sorry. Got a rough crowd back there. All right. Okay, real life example, all right? Agent, and that's 60K in commissions after expense. So let's say it was 90, you got a 1099, all right, for 90,000. You took it down on your Schedule C to 60. Right now, here's what's happening. That Schedule C agent's going to pay income tax on 55. I should have changed this slide because this becomes good. The reason it's 55 is because you also get to deduct half. Here's the thing. FICA, let me get back to this. FICA is 15.3%. FICA has nothing to do with federal income tax. People talk about your tax rate. You could be at a 0 tax rate, all right, 0, and your FICA is 15.3%. Okay? That's the part that bit me in the backside every year. I would remember to put money away. I got to put some money away for my income tax. Gonna have to pay income tax. Gonna have to pay income tax. Gonna have to pay income tax, right? And then all of a sudden I get my tax return back, and I'm like, Wednesday, Thursday, Friday, right? WTF? What the heck? How do I owe this money? I thought I, had paid enough in. And my guy says, well, you forgot about FICA. Here's FICA. FICA is Social Security Medicare. It is 7.65% from the employee and matched by 7.65% matched by the employer. Okay? Bad news for you is you are both. When you're self-employed, you are both employee and employer. So the IRS says you get to pay both halves of that. All right? Back in the days when you had a boss, all right, and you were working for the man, all right, or the woman, all right, and it was W-2, and you got your check every other week. They already took this out. There was 7.65 coming out off the front. You never saw it, and your boss was matching, or your company was matching that 7.65. By the way, anybody know when Social Security Medicare was started? FICA? 1936. Okay. Part of the New Deal. Franklin Delano Roosevelt, greatest president we ever had in the United States. If you listen to your textbooks, all right. And part of the New Deal. You know why they did it? We're in the midst of a Great Depression. We had an elderly population we needed to get out of the workforce because we had a bunch of young pups that were wanting to work, that we needed to get into the workforce. So here's what they decided to do. Let's pay these guys to get out. Okay? Let's take everybody who's 62 and over, say you're gone, we're going to pay you a little stipend, and the way we're going to pay you is because the new people coming in, all right, they're going to pay 7.65, and their bosses and their companies are going to pay 7.65, and we're going to take their money that they're paying in and pay you. All right? Now, first of all, let's think about this for a second. Probably 5 or 6 years ago, there's a really famous guy who went to jail for a very long time. His name is Bernie Madoff, for a Ponzi scheme where he was paying to yesterday's investors with today's investors' money coming in. All right? All right? If somebody gets caught doing that, it's a Ponzi scheme, they get the book thrown and they get thrown in jail for life. If the federal government does it, we call it Social Security thing, it's all hunky-dory. Good. Okay? So Social Security is nothing but a Ponzi scheme, just so you understand that. All right? So, being that it's a Ponzi scheme, I didn't want to play. So I figured if there's a way, because when I finally discovered what this is all about, 1928, I was 28, right? I was 28, and I figured, hey, look, I know you don't want to age well. Okay, things are going great. I was 28, and I knew then that the likelihood of the Ponzi scheme working until I was 62, all right, was not going to happen. Because the other thing, it's supposed to be put into this lockbox. It's only gives you, it's pay in, take out, right? It's put in there. We're not going to touch it. And Joe, when you're ready to retire, I promise it'll be there. All right? Problem is, they're paying for guinea pig research right now with Social Security money. All right? It's not in the lockbox. It's not touched. Its thing is severely underfunded. And the likelihood of it being there when you're ready to take it, here's what's going to happen. It's already headed that way, guys. You know what? Come on, Jordan. You've been very successful in your life. I know you paid in 15.3% for the last 40 years, but there are people who need that money a lot more than you do. Look at you. You've invested well, and you know what? Do the right thing. All right? Dude, that's right. Do the right thing. Come on. Never mind it's you and you're the one that paid it in, so you'll take it out, right? So, if I can find a way to not participate in Social Security, and this is being recorded, and I don't care, all right, I'm going to find a legal way to do it. All right? And this is my legal way of doing it. Still participating, but not participating to the level at which they wanted me to. All right? And this is how we're going to save that money. The other thing, by the way, you know why they set the retirement age of 62 back in 1936? Because the average life expectancy was 62 in 1936. How they just choose that number out of the air? Nope. So what happened, great plan, when they said, hey, look, we're probably not going to pay that much. But in reality, people can start dying. All right? So it's a pretty good deal. Problem is now we're living longer, all right? And we're outliving the Ponzi scheme. Okay? It's just a fact. So people say when you hear people say, oh, and here in Florida, right, it's terrible, right? The politician ever said we're going to raise the Social Security age from 62 to 65. It's the quickest way to lose your job as a politician, right? Because we got a lot of retirees here, and they're like, what the heck? No way. And I get it, because they were based upon a promise. But listen, people, I mean, if you're not there yet, people, when they talk about raising the Social Security wage or age, they're talking about phasing it in. Hey, if you're 55 already, we're going to honor your 62. But if you're below 55, we're going to have to graduate that thing up because we admit it's a Ponzi scheme and it's not going to work. All right? So don't automatically knee-jerk and say, no way. All right? Think about the legitimacy of what's going on. Okay? So anyway, that's my political rant. Here we go. So catch this. $9,180. Is that income tax? That's on top of your income tax. You've already paid 25, 28, 32%, whatever tax rate, whatever tax level you're at, and income tax on that 60 grand. And on top of that, you're going to pay another $9,180 in FICA. Okay? You were doing it, by the way, when you're making 60 grand a year from your employer anyway. Your employer was paying half. You were paying the other half. You were just, they like us being cheap. All right, and they didn't even tell us. They just kind of put a little line item that you wouldn't even notice, and you said, "Oh, I made $532." All right, I was supposed to make $890, but at $532, I'm so grateful. All right, I firmly believe that as Americans, before if we didn't have net check ability, all right, that if every American had to get their gross check and write a check every week instead of just having it being a line item taken out of their payroll, they might think differently when people say things about taxes. All right, but they've sheeped us into, HUD, it's 538, 538, 538. We forget that it should have been 980. Okay, what the heck? You know what I mean? So, and that being said, that's a lot of jack. $9,180 is a lot of money out of $60,000. Significant. Matter of fact, it's 15.3%. Okay, all right. So the incorporated agent instead is going to do this. He's going to take a salary. Let's say 24 grand. And the cool thing is, he's still going to pay income tax, or he or she. By the way, don't be offended if my wife is a very successful executive, could out-earn me in about 22 seconds. All right, so when I say he, don't be offended, please. It's just a generic he. All right, that person could take, is still going to pay income tax on the 60. We're not getting out of that, right? Wish we could, but only pays FICA of 3672. Because they only pay FICA on the 15.3% of the $24,000 salary they took. Okay? 9,180 minus 3,672, $5,500 less than FICA that year. Okay? And that's being very conservative. More conservative than I was. All right? That's not 12. I'll show you how I say it 12. Okay? So that, my friends, is it in a nutshell. Here's more example. Well, let's go back for a second. FICA caps. Well, there are two parts to FICA. Remember, Social Security and Medicare. The Social Security portion, they've set it up where once you've paid in enough money in a year, you're done. It always goes up every year, but there's an amount. Right now, it's about $116,000. Once you have capped, you've paid in on $116,000 worth of income. Once you've paid your Social Security portion of that, then you stop having to pay in for that year. All right? Keller Williams agents, future home agents, you guys understand the term cap, right? Okay, so once you've paid in your fair share, you're done. All right? So, bam, you're done at that amount. Back when I first incorporated, that cap was about 100 grand. All right? I was capping FICA. My income on my real estate sales, or my commissions, my net, after I did all my expenses, was still over 100,000, And so because of that, I was capping FICA, all right, at 100 grand. So every year, my 100 grand, 15.3%, $15,300, all right, was going to FICA. By the way, the Social Security caps, the Medicare portion never caps. Of that 15.3, if you really want to get technical, 2.49% is still ongoing forever. And as of 2 years ago, once you hit 250,000, then that 2.49 goes up. All right, because that's not fair. All right, is it fair that you have that money, Maureen? You know what? How did you get life's lottery, lucky draw? All right, or did you just work hard? Anyway. So, that being said, it goes up as well. So you got to bear that in mind as well, okay? So the 2.49 never goes up. So let's take 15.3. So me, okay, I was paying 15.3. The first year I incorporated, I decided to take a salary of 18 grand. The lower your salary, the more your savings. Here's a big question. Here's one that CPAs never want to answer, all right? Especially not one that's recorded. How much do I take in salary? All right? The lower the salary, all right, the bigger the savings. The lower the salary, the greater the potential for audit. All right? So, have to have a justifiable salary. For me, 18 grand. I took 18 grand for 8 years and never got touched. Here's what the tax law says. A reasonable salary. Because all you're doing is paying yourself to run your corporation. Okay? So I paid myself 18 grand a year. So instead of paying 15.3 on 100, I was paying 15.3 on 18. That difference is 82,000. I mentioned I was a high school math teacher before I got into real estate, so I knew these numbers real fast, all right? 82,000 times 15.3% is over 12 grand. I saved 12 grand in that first year by not paying FICA on 100 and only paying FICA on 18. Okay? Remember back in 2000, was it when John Edwards and John Kerry were before? Was that 2004? John Edwards got busted on this. All right? And it's funny, even though I differ very much politically with John Edwards, I was like, right on, dude, that's what you got to do. The tax law says you can't. He had like $4.5 million worth of income from his trial attorney practice, but he took a salary of like $320,000. And they caught up with him and they said, hey, look, what's up with that? And it's all in the tax law, and he should have said, and he did say, hey, look, it's in the tax law, I have every right to do that. People say, well, what's the big deal? He capped anyway, right? Problem is, he didn't cap Medicare, right? And which is not a big deal either. I'm like, hey, right on, dude, go for it. That's what I do, all right? I'm with you, all right? Go for it, more power to you. Problem is, he was out stumping around, railing about how we need to raise Medicare. We need to raise more money. We've got to raise the Medicare portion of this. And he was up there not paying Medicare on about $4.5 million of his income. Okay, so that's where got to be a little sticky for him. Is that, hey, we need to make more money in Medicare, but I didn't pay the Medicare as much as I should have because I didn't, you know what I mean? So you can't speak out of both sides of your mouth. All right. So that being said, everybody got the concept? That's how I save my 12 grand. Here's some expenses for incorporating. Costs about $100 to incorporate. Don't pay somebody to incorporate you. All right, I did the first time. All right. They charge you, they get you this little book, they get you an embosser stamp and all this kind of stuff, real fancy. Oh, that feels good. You don't need it. Okay? All you need, you can go to sunbiz.org, all right, and incorporate today. All right? About 7 minutes. You guys jump online right now and incorporate before you even leave here. Okay? Have your articles of incorporation done, bam, boom, objects, fill in the blanks. Okay? The most important line that sunbiz.org is looking for is your credit card. Okay, that's all they care about. Call yourself what you want. I don't care. Do what you need to do. Just make sure that credit card clears. All right, so we can charge you that whatever fee it is, $85 or whatever.
78.
Okay, what's that?
$78.
$78. Okay. The other reason I said 100 because you can pay another $25. I think you have to pay that to DVPR. Or is that free to change your license?
I think it's 30, but yeah.
Okay.
Sorry about that.
Okay, so $25 or $30 you have to pay DVPR because your license is going to have to be changed as well. All right, we'll talk about that in a second as well. Okay, so it costs about $100 to incorporate. Corporate bank account, because you have to have a separate bank account for your corporation. All right, should be $0. Go to Fifth Third right now. Fifth Third has free business banking.
Florida Bank.
But Florida Bank has free business banking. Okay, go. Don't pay for a monthly thing or a per check or have to have a minimum balance. None of that. They're out there. Okay, they're out there. They want that. quarterly payroll, because Robin Quant PA is gonna pay Robin Quant a salary, all right? Quarterly, she's gonna have to file quarterly payroll tax returns, where she is saying, hey, I'm, Robin Quant PA is a corporation paying a salary to an employee, and therefore you have to figure that out and do that stuff. Me personally, I paid my guy about $75 a quarter. I mean, about $75 a quarter or so, okay, to do some of that stuff. And he just took care of it. I just got him an Excel spreadsheet that says, here's my stuff, here's what I paid myself in salary. He spat it back out, had all these forms, sent it back to me and said, sign here. That was back in the day. Now, a lot of times they can just file it electronically and actually get access to your account with the IRS and pay the payroll tax right from your business account into the IRS electronically. It's all done. Okay? Pretty simple. But you can do that. For me, $75 a quarter, I'd rather go sell a house than worry about what a 941 form was looking like. I'll let the people do their job and I'll do my job. Okay? Corporate tax return. At the end of the year, you're gonna have to do a corporate tax return. I do my own taxes. I got TurboTax. I get that. That's cool. A corporate tax. I did mine for years as well. A corporate tax is a little bit different. A corporate tax return. The biggest problem that most people run into trying to do their own corporate tax return is the balance sheet at the end. Okay, because you got to create a balance sheet. You got to say, well, here's what's my starting cash, and now I've got this, and this is my ending cash. And the guys who do it for a living, guys and gals who do it for a living, they know what to do. They can get it done a lot faster and with a lot less stress than you trying to pull your hair out and figure it out. Okay? I would factor that cost into your analysis. All right? State fees. After you do it annually, you have to pay state fees to keep your corporation valid, about $150 a year. All right? You'll get a little postcard in the mail that says, hey, look, your corporation needs to be updated. All right, today it's in January. You have until May 1. You want to do it. It's literally like $125 or $150. If you do it before May, if you wait till after May, it's like $500. Penalty is pretty significant, so don't miss it. Okay? You're laughing because you did that, right? Did you miss one?
No, but I saw it when we were renewed.
Yeah, right. All right. So add that up, it's about $1,000. All right. So I say that to say, if you're not going to save $1,000, don't do it. All right. By the way, I make $0 for you incorporating. I'm just here to help you save money. All right. I'm not a CPA. I'm not any of these things. I'm not the state. I'm not. I'm just telling you. Here's a way that you can save paying FICA. All right. And leaving that in. Now, here's some frequently asked questions. This first one is the first one I asked. Okay. I told my guy, because we were talking about salary. Once I got the concept, I said, oh, I get it. Lower salary, more savings. And he said, well, it has to be reasonable. I said, well, what have you seen in the past? What have your other clients done? What have, some other people do you have any other realtors that you're working with that have done this? What do they take? Well, some take 12, some take 15, some take 30. And I'm like, well, let's just split the difference. And how's 18? Like, that's defendable. You know what I mean? You got to have something that you feel is defendable in the case of an audit. I've never been audited, but I feel like you can defend that. Okay? So, but I said, hey, look, that's great, but my mortgage payment's more than $1,500 a month. I need more than that to live on, right? I can't live on 18 grand a year. So what if I need more than that? Here's the answer. No problem. Okay? You have full access to every penny that's in your business account. All right? Full access. The key is this. I wrote a check for my mortgage payment out of my business account. I wrote a check for groceries out of my business account. No problem. The key was I coded that, because you're going to code everything, all right, as a shareholder distribution, not as an expense. Okay? The only thing you code as an expense is a legitimate expense. That's an expense of you doing business inside your corporation. Are you with me? So, if I write a check for, when I say write a check, you're probably just using your Visa and reimbursing you're paying your Visa bill, right, or whatever it is out of there, right? But I wrote a check for my board dues. I would expense that for me, $520, memberships and association. $520, why? Because how long has it been? 16 years ago when I incorporated, I still use the same chart of accounts that I was given by the guy that I was working with, the accountant. By the way, when you set up your corporation, meet with your accountant and set up a good chart of accounts. He'll ask you, okay, here's some typical, I use QuickBooks. You go into QuickBooks, they say, what type of business are you doing? You say, I'm a real estate agent. Boom, they give you a sample chart of accounts. If you said I'm a housekeeper, there's a sample chart of accounts. There's some typical expenses that we see with housekeepers. And here's some typical expenses that we see with nannies. And you're going to choose from a myriad of things when you get QuickBooks. Highly recommend QuickBooks, all right? Or something like it, all right, that you can do that with. You're going to look, by the way, it'll speed things up. You know, QuickBooks memorizes your vendors. So if you're writing the same bill, you're writing to Duke Energy, right? Guess what? Duke Energy, you already have it pre-set up where the account numbers, the memo line, everything else, and it just saved me a ton of money just paying my personal bills once I got QuickBooks, right? Just bam, 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 things just spit out and go, right? So you still have access to it. But if it's a personal expense or a personal item, not a business expense, you don't code it as an expense. So what's happening, remember I told you the K1 distribution comes at the end? It will, but that doesn't mean that 60 grand, let's go back to our example, that 60 grand that was at the end was profit and was going to be distributed to the shareholders. You've taken that along the way. It's not like you're waiting to write yourself at the very end of the year, oh my gosh, I'm going to start. If I have rice and beans one more time so I can write myself that $60,000 check, right? That's the vision I had when I first incorporated. It's like, I can't live there. No, I got to live, and I've kind of dribbled that 60 grand out along the year. But it's not salary. The key is you don't code it as salary. Because if it's salary, what is it subject to? FICA. All right? So it's a shareholder distribution, shareholder distribution, shareholder distribution. And at the end of the year, I may not have any, there may only be 2 grand extra left in that account, and then I distribute that money as a shareholder distribution in the form of cash. The other times it was dribbled out as a shareholder distribution in the form of paying the grocery bill, paying the Duke Energy bill, paying the car payment, paying the whatever I was doing personally. Fair enough? I got me? All right. Isn't accounting and paperwork a nightmare? Okay? Not if you set it up right. I'm telling you, this is the part here. If you do nothing else, this is going to force you to be organized. Right now you're not. Because you know why I know you're not? Because you're realtors. Okay? 98% of realtors wake up and live their life on accident. Okay? Not on purpose. Trust me, I've done it, all right? I've been on both sides of living on accident and living on purpose. Right? We laugh, all right? By nature, here's what I know. The rare is the person who's great with people and great with this. Rare is the person. All right? The person who's really good at this loves to sit in a cubicle and would faint if they had to go meet somebody and shake their hand. All right? Who's really good at this. All right? You guys are really good at going out, shaking hands, and meeting people, having fun with people, helping them buy houses, helping them overcome problems, and do this kind of stuff. And by design, it's not common that you're also really anal retentive. Okay? By nature. So, that being said, I saw Robin's post on Facebook today that, I think, did we put the kitchen on there on accident or something? What was that?
And then the kitchen came with the house.
Yeah, right, exactly. That's the reason you have kitchens to came with the house. Exactly. Okay? So, but you're going to love this. Once you start tracking everything, that everything has to be coded, all right? Because everything that's going in and out of there has to be coded. That goes, that's kind of cool. You know what? And guess what? I can push a button at any time and know where I am this month, profit and loss wise. How much have I spent for advertising this month? Boop, it's right there. Click on it. All right? I have a line item on a summary report of my profit and loss. If I actually click advertising, all of a sudden every check or every income or outgo, debit or credit that's applied to that advertising is right there, and I can analyze it and see it. Your accountants love it. Your tax returns should go down. You know why? You're getting overcharged for your tax returns because at the end of the year, you're walking in on April 12th, all right, with a big shoebox full of receipts and say, here you go, bud, all right? Let me know when the extension's ready. Right? So because I know we're not filing on time. Right? You guys laugh. I am you, all right? I get it. I've been there. All right? So, that being said, now my tax returns are done by ready by January 15th. Because I'm not waiting for a W-2 because I am my own boss, right? I am my own corporation, so my W-2s are ready from me. I know how much I've paid, and all I do is hand my accountant like 4 sheets. By the way, I've got 4 different corporations, and I'll tell you why that in a second. Remember, if we don't get to it, remind me to tell you about board of directors meetings. Okay? family vacations, board of directors meetings, call it what they want. Okay? All right. Okay? All tax exempt. I have to, by law, you have to have a board of directors meetings annually. Okay? Last year, we had our board of directors meetings skiing in Colorado.
Yes.
Okay? We had our board of directors, another board of directors for another corporation on Martha's Vineyard. IBM sends their people to Jamaica, right? Families included, come on down, we'll cover the costs, everything else, and IBM writes it off. Why can they and not me? You know who my board of directors is? My wife and I. Okay, so we're skiing, boys are asleep, all right? Get out, make myself a nice cup of rooibos, all right? Fire's going, let's sit down, legal pad. Okay, what time we start? It's 10:08, 10:13, we're done. Bam, locked up. Nice board of directors meeting, hallelujah. All right? That was a long trip to come out here for 5 minutes, but here we go. All right? And here we are. All right? This is what you are. Now again, I'm pretty, you may not be that risk tolerant. All right? I say bring it. Let's go. I'd love to have that conversation with IRS agent why IBM gets to write off their board of directors meetings and I can't. Never had to, but I'd love to have that discussion with somebody sometime. I'm not tempting you, by the way. If you're an IRS agent listening to this recording right now, I'm not tempting you at all. All right? And if you need to look me up, my name is Jim Shands. And what's our social security number? They know. I donated to the
You don't
Tea
have them
Party.
when you're in court.
I donated to the Tea Party. Trust me, they know who I am. That's not who I am. All right. Okay. All right. You should be tracking your income regardless. Okay, I already have a corporation. Can I use that? Okay? More than likely, no. Because your corporation is, we buy houses and flip them Inc. Your corporation started as, I'm the shizzle, incorporated. Okay? Now, you can incorporate it as anything you want to. All right? The problem is, as a broker, and whoever your broker is, can only pay a commission to a licensed entity. And DBPR has said there are 3 ways that you can incorporate into, what's that?
The ink is not right.
Oh, it's not right? You can't ink?
No, you can't.
You cannot ink.
Okay, check that out.
Unless you own your own brokerage company and you incorporate that brokerage company as, you can like Future Home Realty Inc. is
Okay,
fine,
gotcha.
but
Right.
an individual cannot.
So it's just PA or LLC?
PA LLC, there's a PLLC and a couple other weird ones, but PA LLC are your 2 that are run this.
Okay,
The
good.
only,
Forget
the
the
only
ink.
2 you can do.
All right, got it. So just think PA or LLC. All right? And the reason is because you're going to have to change your license to say Barb Wood and PA. Because once you have that and prove to us that's there,
Advertising too.
right, exactly, yeah, because that's what your license says. And the reason that the DBPR wants you to do it this way is so that they want the public to be able to look you up, and it's a safe assumption that Joe Elmer PA is still the same Joe Elmer that passed the test. Okay? And I can look up Joe Elmer and find out who his broker is if I have a complaint against Joe Elmer. That's why DBPR wants that. They don't want them to have to jump through hoops to find out I'm the shizzle link is really Joe Elmer. Okay? All right? I know. Okay, you are the shizzle. Okay. But, yes, sir.
At that point, you have to change all your documentation in terms of listings and so on.
Listing, yeah, well, you just notify the board that you're now, you're named PA, and they'll change it in automatically. Once you, as far as in the MLS and that kind of stuff, but if your signs and that kind of stuff should be changed as well.
What about the documentation? You take the number of listings.
Yep.
At that point, you have to change your listings, correct?
No, well, your listing is technically, are you your own broker?
No.
Okay, technically your listing's in the name of your broker. All right, your brokerage. So you're fine. You're just gonna notify your broker so that he can do that. So yeah, no, you would not have to.
Okay.
Yep, good question though. I like it. Okay, fair enough. And the reason that's why you have to choose that and do that. So don't incorporate otherwise and drop ink. I'm gonna change my PowerPoint before I teach this tomorrow. Thank you, Jim. Okay, why don't you tell me 3 times? I've taught this 3 times already, so I'll have to go back and say that.
I do it every time. You always bring it up. I tell you.
Break in then and tell me. Hit me over the
I gotta
head.
change your slides.
Okay, all right. So everybody cool with that? That's how we have to incorporate. And the reason is it's all licensure reasons. Okay, so that I can legally pay a commission to that agent.
What's the difference between
PA and LLC. Good question. PA stands for Professional Association. LLC is for Limited Liability Company. Check with your accountant and your attorney. The reason I chose PA was this, is back in the day when I incorporated, my guy told me that single entity LLCs, which I wasn't, I was a dual entity, dual shareholder, my wife and I, okay? But if you were going to be potentially a single agency LLC, that there was an IRS memorandum going around that they by default are going to be treated as a sole proprietorship, which defeats the very purpose of doing this. Okay? Now, I believe, check with your person, that you remember how I told you want to be an S corp? You want to make sure you make an S corp designation. Okay? That even though I'm a single person LLC or a single person PA even, I would make your guy or gal file an S corp designation. This entity wants to be treated as an S corp for tax purposes. All right? There's a form that they fill out that does that. You maybe even in your articles of incorporation, when you're incorporating, you may be able to choose to do that.
Can you, under your LLC?
Yep.
Set up multiple DBAs?
You can, yes, you can. The issue would be, again, are you a one-man office?
Well, yes.
Okay.
Yeah.
So,
But I'm in more than one business.
gotcha, I understand. So I believe you can. However, because remember the first slide that I'm not a tax attorney or anything like that, you might want to check with somebody to make sure. I believe that yes, you could just do, rather than incorporating 4 times,
Right.
do a DBA that feeds up to that. I think you can. Okay, operator, we're thinking this is being recorded, so everybody's clear that I'm telling them I think that. Okay?
I have another question.
Yeah.
So, you pay yourself a salary.
Yep.
Can you also have a 1099 that you issue? to
Gotcha.
others?
Great question. Answer is no, because once you're an employee, you cannot be employee and a independent contractor.
But you can have independent contractors working for you.
Correct.
So I could be issuing 1099s
To other people.
to other people.
It's not some employee
They
to you.
might be on my board of directors.
Correct. Absolutely. And they absolutely can. So yes, you can do that. All right. But once you start paying yourself as an employee, you can no longer pay yourself as a 1099 because as a shareholder, it's a shareholder distribution.
Mhm.
Okay. It's not anything else.
Okay, question.
Yeah.
With you and your wife?
Yep.
being an you pay her salary too?
I don't. We never did. But you could. All right. It just for us, we were trying to. At one point, she was already capping 5K anyway from her regular job, but now that she's not working outside the house right now, and so with that in mind, we could, but we just paid more 5K. Or I could have taken that salary and divided it to pay the same amount of 5K, I guess. You know what I mean? Take that 18 and pay 9 to each. We do a shareholder distribution at the end of the year to each of us because by law we have to. A K1 has to be issued to all shareholders. Fair enough.
So what he was saying, with an S corp, I have a second business.
Yep.
And I could take the payments in my second business and also use that same S corp, or if.
I think if it's not real estate related, and because he's his own entity, right now, I think where you would run into problems is licensure issues, that they don't want a DBA feeding into your licensed entity, okay, because of licensing. Now, he's his own broker and boss, so he can kind of do what he wants to do, all right? But you would probably have an issue with your current brokerage, all right, by doing that. You can investigate that. I can't tell you 100% no, but my best guess is no, because of that, all right? Because they don't want you commingling licensed activity and unlicensed activity in the same corporation. And that's what you'd be doing with a DBA. You ever DBA is doing business as? All right, that's what DBA stands for. Okay, good question.
A fictitious name.
Fictitious name as well, same thing. Okay, so, but you can check into it, check with your tax person and see. All right, and it's possible, but I would clear it through your broker as well, make sure that he's comfortable with it. Because your broker, quite frankly, as a broker, I would not want some dog walking company being thrown into my licensed person's thing, therefore trailing back up to me, and now they want to sue me because somebody's child got bit by while you were dog walking, and my E-no doesn't cover that. Okay, yet she was acting as an agent of Future Home Realty because it's the same, and so that's just the lawsuit avoidance guy in me talking things that I've seen. Fair enough. Okay.
So now,
Here.
that brings up a question for me, because I also do the feng shui.
Yep.
I do that on a listing.
Yep.
Property, do I include that in?
And I'd have to think about through on that because it's a separate entity. I think this is something you offer as a add-on or something in part of your real estate thing. That I think that I can draw the correlation there. Okay, and not that you would roll that entity into one. I think you still need to have a separate LLC because if you make money aside from a real estate commission against people who you're not working with in a fiduciary relationship on an agency relationship as a real estate agent, then I say keep it separate. Does that make sense?
I think you answered the question I needed to ask. If you had rental properties, personal rental properties, would you put it under that same heading?
Yeah, I'd say no.
Okay.
Yep. I'd say no. Good questions. More right now? We'll finish up in about 2 minutes, really fast. Okay, but if you got questions along the way, you can let me know. What's the break-even point? All right, so I told you what break-even point. Now again, the answer is the more aggressive you get in salary, aggressive being lower, right? The sooner you'll have a break-even. Okay, if you took $1,000 annual salary, now you're paying $153 in FICA instead of whatever 15.3 of the income you're having. That's real aggressive. All right, cool. I'm good with it. Go for it. All right, I'm not going to defend you in an audit, but that's up to you. All right, you go for that and you defend yourself. That being said, I think it's somewhere as low as that's where I always differ with my accountants. Always come in here and say, because they always want you to take a $30,000 or $40,000 salary to protect yourself and make sure all this kind of stuff. I'm like, that means you got to make 60 before it even makes sense to do it. All right, if you start taking that high of salary. I never did. I'm telling you, I was making good money taking $18,000 a year salary. That's all I can tell you is my story. All right? Okay? It is what it is. Now, can I choose my own fiscal year? The answer is yes, you can choose your own fiscal year because a corporation can say, I want to start any time. However, I suggest for sanity, and I know realtors, and I told you I know you, all right? I am you, all right? That my suggestion is that you just keep things nice and easy. Keep it on your same tax year as your personal tax return. Because at the end of the year, what happens is that K1, your 1040, all right, your personal tax return is going to have a couple lines on there as far as income. One's going to be the W-2 that you issued to yourself for salary. Mine said, here's a W-2 from Bob for 18 grand. All right, that came from. Now that was an expense on my corporate tax return. Can you see the shells moving a little bit here? All right. So over my corporate tax return, there was an expense of a salary to the CEO, me, for 18 grand. That 18 grand though, that company issued a W-2 to me personally that I had to put on my personal tax return. So that's there. Okay, now I told you can't get away from income tax, right? That's going there. And in addition to that, if I was 49% shareholder on the 60,000 that was left over, so 29.2 or whatever that ended up being, okay, I also had a K1 from my corporation, and that's a different line. Okay, it's not under W-2 income, it's under shareholder distribution canon, even says K1, okay, on there, and you put that there. All right, so you have different, and that still adds up to the income. Are you with me? But the key thing here is that it's broken out, so we're only paying FICA on that salary portion. Okay? But you can't choose your fiscal year on your personal tax return. Okay, you are January 1st through December 31st, everybody is. So because of that, for sanity's sake, you do. That's also why we like to teach this in November, because you officially got about 7 weeks to get this cleaned up. My suggestion is that you make it a goal to get yourself ready to go with this. Okay, organize yourself a little bit, get yourself incorporated, take a look at it, make sure it makes sense, talk to your person, and then have everything ready to go come January 1. So that when you start writing new deals, all right? You can write them under the name of Robin Quant PA, and your broker can issue checks in that manner. Fair enough? Okay? Are all accountants the same? Absolutely not. Some of these guys, I've had people come back to me and say, I talked to my accountant, he said you can't do that. Okay? I say find a new accountant. All right? I've had accountants, I took it to my accountant, he said that it doesn't really matter, you're wasting your time doing that. Okay? Well, find a new accountant. Because my accountant allowed me to save 12 grand the first year. All right? And FICA. Now again, less paid in, less taken out. If you're planning on Social Security to retire, then you may not like me. I'd rather take that 12 grand and go self-invest and say, you know what, I'll take care of my own retirement, thank you very much. All right? And unmarked bills that I can take to the Kings. What a joke! We're so funny! Aren't we funny? Okay. You guys gotta loosen up, man, around here. All right, here's a bigger question. Got some of you here. All right, how do I get to a point where I can net more and justify incorporating? If I'm not to the point where I can justify it at this point, all right, I think the easiest way is just join Future on Realty. All right, okay, and you do that what's coming. All right, just so you know, if you guys don't know about us, agents pay us $35 a month, $250 out of any transaction that includes E&O, and you'll never pay us more than $4 grand in a year. All right. You heard a lot of agents here are from Future Home Realty. I'm a nice guy. They like me. They like my compensation plan better.
Well,
Okay, right. Okay. The real reason they're here is because of $35 a month, $250 a deal, and 4 account. All right. If you'd like to talk to us more about that, we'd love to be in dialogue with you. Because here's what we've done. We've hybrided earn more, keep more. Okay. We think we have a lot of great classes. As a matter of fact, after this, we'll take a 2-minute break and we'll jump into our 100K club. Because we got a class that's teaching people how to make 100 grand a year. All right? I'm a firm believer that, well, first of all, if you make 100 grand a year in real estate, you're in the upper 5% of realtors. Period. Okay? You're in the upper 2% of the United States. Okay? If you get to the 100 point, you make 100 grand. All right? Now, it's one thing to make 100 grand, and we're talking about netting 100 grand. I tell agents all the time when we start that 100K, you know, hey, if you're on a 50-50 split, I got to show you how to gross 200. Okay? All right? That's fine. I'll do that. But we got to work harder to get to 100. All right. If you're here, I'm going to show you how to gross 104, and I can do that a lot quicker. All right, and just give us 4 to do it. So that's what earn more, keep more is all about. Questions? Anything I can answer? We answer some along the way. Barbara.
Can you W-2 your children if you pay them? Do they have
You
to
can.
be like
You can.
15 or how?
You have to check the tax. I'm not sure what it is, but they still have to pay FICA. They have to start paying in. So, I mean, yes, you can. Yep. All right. Or if you're going to pay somebody to, you know, here's the thing. 750 real estate agents. Future Home Realty has 3.5 employees, and I'm one of them. Okay. Employees are an expense to a company. By the way, back in 1936, when they mandated these companies start matching your FICA, guess what they did to your salaries? They closed them down. Right now, if you are getting paid a salary, all right, somebody would pay you more if he didn't have to pay your 7.5%, 7.65%. Just here to tell you. I've got people that work for us that do our file compliance. Some work from home and they can choose their hours and they're independent contractors, and I pay them X. Other people I want there at the office so that they can be there if agents have questions, and because I mandate when and where they have to be, I have to call them an employee because the Morgan & Morgan employment law, call. All right? 1-800 Morgan Law. All right? Paying overtime, you're not getting the cake. So because of that, there are employment attorneys out there. So I got to make them an employee, but I just have to flat out, hey, I can pay you $15 an hour if you're an independent contractor, but now I got to pay you $13.50 an hour as an employee. Okay, it is what it is because I got to pay that 7.65 on you. Okay, and so I just flat out, it is what it is. And you think corporations don't do that? Oh, look, I get somebody I can pay as an employee, you know, then they gross it down.
So anytime you pay salary, that money is subject to FICA.
Correct.
Whether it's to yourself or to anyone else,
Correct.
like the children. But if you pay 1099,
Yep.
then that child can do his own Schedule C.
Correct. Exactly. And that's the key.
Yeah.
The trick is that to say, hey, child, even though you're a child or a grandchild of mine, I need you here from 9 o'clock to 2 o'clock, Monday, Wednesday, and Friday, all right? Now, hopefully your grandchild won't go to Morgan Law and sue you. But if you said, hey, I'm gonna pay you as a 1099 subcontractor, that's why, we have office meetings. If you ever say, hey, real estate agents, you will be at your office meeting. If someone's telling you you must be at an office meeting, okay, you gotta be here at this time or you can't work for us, you might want to go talk to Morgan Law. Okay? Because I can't mandate independent contractors do anything.
If Charlie Chris is available now.
That's right, he is. He'll be back in Morgan and Chris.
He's joining the Libertarian Party.
Yeah, let's go on. Exactly. It's good. Let's try one of each. All right, let's do them all. All right. More questions? Yes, no, anything I can answer? Yes.
When you sign, any, like buyer brokerage agreement,
Yep.
listing, whatever, are you using the PA?
Yeah, if you're signing as a registered agent, you know what I mean? Because, I don't know what your broker does, but it says broker or authorized agent on there. So we allow our agents to sign, listing agreements on their own, okay? So, but yes, because your license now says PA or LLC, nodding, all right, then, you have to just write comma PA. Yep. Good question.
I have a question.
Yeah.
If you're not an agent
Yep.
and you're incorporated.
Yep.
Do you have to pay yourself an income? No. You can just do distribution, right?
That is correct. However, if you are a profitable corporation and you're not paying a salary, you need to check with your accountant and your tax attorney because I think you're opening yourself up to a red flag for a potential audit if you're not taking some salary. Yep. Because that's what my guys always told me. Because once I learned that, hey, lower salary and more savings, I was like, hey, let's take it down to a penny.
So if you have other income.
Yep.
You can justify taking a lower salary. But
Right.
Basically, if you're taking $10 a year and that's your only source of income,
Yeah.
the IRS is going to say that's not right.
Right.
We want to tax you on that money.
Right.
And they'll tell you how much salary you took, and they'll tax you and give you penalties on it.
Right. They'll go backdate it. Say you should have been taking X.
Yeah, they can go back.
And so when you they're going to start with the people who are taking 0, all right, and they're going to work their way up to people like me who are taking 18.
Well, you have other income and you're barely making any money in this.
I think if you're barely making any money, it's probably not even on their radar.
Right.
All right, as long as you're not making it to the Tea Party. As long as you don't donate to the Tea Party, then you're on the radar. Okay, then you come on the radar.
As far away from that as you can get.
I can totally appreciate that.
Just a quick info thing, just so you guys all know about the licensing and that you have to do LLC, PA, it's kind of a recap, but LLC, PA after your name, whatever's on your license, basically just take that, put an LLC, PA after it is what you're going to incorporate as. And then once that's done and they actually get to corporation, then when you file it with the DBPR, it's the DBPR RE16. I don't know if you want to write that down. It's $30. And then they issue you a new license out. So that's like step 2 of the process.
Right.
So it's not just incorporating, it's incorporating and then adding it to your license. You have to add it to your license. Here's the reason why. A broker can only pay a licensed real estate entity. Therefore, it has to be on your license. So you're incorporated, great, but if it's not on your license, us at our office, if somebody says you got paid to my PA, I look up their license on the DPR and I go, well, it's not on there, I can't. So we cannot pay it to it until it's been added.
Right.
So make sure you do that second step. That's the most crucial one.
Right.
Otherwise, it's useless.
Yeah, because you can't pay a PA. All right, you can't pay a corporation until your license says that, and we verify.
Yeah.
All right, we don't just say take your word for it. Even if you bring us your articles of incorporation, right? Hey, I've incorporated. Here's my proof. I got my from sunbiz.org. I printed it. That's great. Have you notified DBPR?
Yeah, a lot of companies used to do that, and us included, until we realized from the legal hotline that it had to be on the license itself. So you will see old companies that are still writing them, but they just don't know that they're not supposed to.
So,
Yes, I'm sorry, I came late, I had
That's
a
all right.
car accident, so.
oh no.
My question is, I didn't catch the first part. My question is that, of course, if I'm licensed realtor and under future home,
Right.
and then if I have my company, LLC, whatever, PA, and my name and PA or so company Future Home will pay me, right?
Pay your company.
Pay, I mean,
Yeah.
pay my company. And then, my company can have somebody else's name in or no?
Oh, you can be, your company can have another owner, you're saying, or,
Yeah,
or a shareholder, actually? Yes, you can have as many shareholders as you want.
but the company's name is my name.
Correct.
And I'm a like the licensee.
Right.
So it doesn't matter the other person or.
The other person doesn't have to be licensed. It's just your company can pay them, they can pay them as an employee, as an independent contractor, or as a shareholder.
Oh.
Yeah.
Okay.
Good question.
Thank you.
And if you missed it, you email me and I can get you the PowerPoint if you want to see it.
Sure, thank you so much.
Are we cool? I know we ran a little late, so everybody good? Those of you sticking around for 100K, all right? Let's do a 3-minute potty check, all right? And then we'll jump right in. Sound cool? Awesome. If you need anything, let me know, all right?